Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you're getting some good trades. There's nothing more frustrating for an intraday active trader as to get caught in a tight, narrow range and getting whipsawed around. As you can take a look on my 15-minute chart of the euro dollar, you can see that the euro dollar has been very tight all day. At most, we had about a 53 pip low to high earlier in the day, and that was it. Based upon the average daily range pro calculator by Compass FX, you can see that our 5-day average daily range has been at 124, but the market's been tightening down and tightening down. We'd even make our ADR high or low targets today. We've maintained a range from our weekly high to weekly mid-high that was given us back on Sunday evening. And interestingly, we've just been kind of flat, not too far off the 50 mark, the mid part of the Traders Dynamic Index. And so for intraday traders, the key is in this tight range is really to go out and take a look at the bird's eye view of what the market's doing. Now when I start my day off, I like to take a look at the 4-hour chart. That's the bird's eye for me. But we're going to go ahead and step out one more time and take a look at the daily. But before we do, if you want to take a look at what the week's been doing so far, let's take a look at the hourly chart. On this hourly chart, you can see that the market here has been pretty much in this range here for about 2.5 days, right between the weekly mid-high and the weekly high since about mid-Monday. We started the week fairly low, made a strong move up, and now we've just been sitting here in this tight little range. Now interestingly, you can see here that we had this high squeeze up here in the Traders Dynamic Index. Everything's way up high and the market baseline starts rolling back down. Now if the Traders Dynamic Index rolls back down towards the 50 level and price doesn't follow, this is an indication of an upward move. Now I know there's a lot of fundamental reasons in the marketplace for the euro to go back down, and there's some geopolitical reasons why it should go back down, but there's also some geopolitical reasons why they want to support the euro and push it back up. Also think about this. The path of least resistance isn't always in the direction of the crowd. The market right now is heavy net short the euro dollar. The path of least resistance might literally be the direction of where the most amount of pain is. If the market's heavy net short, then that tells institutions and large firms that they could push the market the opposite direction against the shorts, squeeze them out, and profit off the stop loss orders that are hit. Think about that. So just be aware that my Traders Dynamic Index has come back down to the midpoint and showing a potential upward move. Let's take a look further out in time at the daily chart and let's see what's going on. As you see on the daily chart, the market baseline continues to make a push up. We did have a double top here and it made a push down and caught some traders off guard as it pinned low and then pushed back higher. Now it looks like a double top pattern and a fall back over. That's one of the reasons why folks say technically it looks like the euro should be rolling back over. But that's not necessarily the case. You can see here that the market baseline is continuing to make its push on up. If you go back down to hourly and take a look at the hourly charts, you can see that we had this high up here and the highs seem to be getting lower and the lows seem to be getting higher. This would give us a pennant type pattern, sideways wedge, symmetrical triangle, whatever you want to call that. Now most of the time this will drop short. However, if I pan out just a little bit, notice what we have here. What we have here is a potential bullish pennant pattern. If this is back at 50 with a bullish pennant pattern, the sentiment is reset to make a move. Green and red are already starting to push to the upside. We could see a break here and a push on up. Back to the high point here, which is right around that 32.90 level. But based on the daily chart, this high point would put us back here, would put us near 133.20 on the top side, and these average lows right in here put us down at a low point of 30.25. But 30.25 is nowhere near the picture right now because of how strong the market is pushing up and up. So if you're a frustrated intraday trader getting chopped around, a bird's eye view is going to show you that we have a pretty sizable range. So what I'm looking at is the potential for the market to move back up to around 133, 133.20. Look for the market to potentially break that. If the market breaks that, then look for the market to push up, potentially back up to around 34.35, 34.50 level. If the market settles back down, can't seem to break it, look for the bounce off of 133, 133.20 area, back down to about 31.70. 31.70 is the midpoint between the two ranges. So if you've ever played a range before, make note of the midpoint of the range. The midpoint of the range is 31.70. If we fall back down and cannot break 31.70, the market will bounce and push back up. From this low to that high, a 31.70 is about a 38.2 to 50% retrace. That's a standard retracement before a potential continuation. Look for that. I do see the potential double top here from the daily perspective, but with the market baseline, the yellow line continuing to push up and the green line getting rejected lower, pushing higher now above the red and yellow, there's a possible push to the upside. So as an active trader, consider what the market's giving you. The market's giving you a big range. Look for a break of the range higher or a break of the range lower, but my take on it is we're going to be bouncing around inside of this. Running from high to low, last point here I want to make, from high to low, we're sitting at 38.2. We get above this, we get above 133.20, we're on our way to 34.35 level. Some market participants are looking for a move all the way up to the 136.20 area. That would take us back to the 618. At that point, we'd have a nice 1, 2, 3 down pattern. By that time too, we should see this starting to roll back to the downside. But for right now, make note of 133.20, 130.25. Put a midpoint in here that's right close to that 131.70 level. Look for the market to possibly break 131.70 to push lower. If it's held and we hold within 133.20 and 131.71, there's more range to go. Be cognizant of what the Trader's Dynamic Index is attempting to tell you as you trade. And literally looking here, the market looks to me like it may want to try to push higher with the green and the red over the yellow. If the yellow market baseline intraday continues to work its way up and the green can't seem to break it, we push higher and we test 133. Well, folks, this is Dean Malone with Compass FX. I hope some of this information will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.